So those days people are hearing about a crash coming in the equities market. And realistically, there could be a giant possibility of a crash coming, and the fundamental issues in the markets in general and economies in general is something I've written about since starting 2009 and onwards, because I believe we have a fundamental root issue that has been growing with time. We've been feeding the beast. However, they're hearing that on the stock market and in the bonds market, and they're panicking in the real estate market. So I wanted to put things into perspective for some people here, because look, panic is never good unless you're one of the first to panic. I've said it before, I'll say it again. If you're one of the first to panic, you'll exit with the least amount of losses possible, and that's it, done, finished. But if you're not one of the first to panic, panicking will only get you into losses. You will not be able to get away with minimum losses from whatever would be coming. That's item number one. Item number two, panicking in the real estate market and selling property in any market. Now, this is mostly happening in markets where people have seen a growth of 100-200% over the past year, 2 years, 3 years. Again, let's put things into perspective. To give perspective to things, we need to compare the growth of the real estate market and real estate prices over the past 20 years and the growth of equities prices over the past 20 years. And what we will find out is that equities have risen in some cases thousands of times. Let's say on average between 50 and 200 times over the past few years. Yet real estate in general has not. So the growth of real estate over the past few years was a maximum of 2 or 3 times, which in some cases is still overvalued assets and fluctuated in a non-normal, non-organic way. However, if you compare those two, let's call them inflated assets, although I don't believe all real estate today is inflated. I believe some of it is well valued and some other is undervalued. If we compare those today, we'll find that we're talking about an asset that has grown by 2 to 3 times, and that's 200 or 300% at best. Yeah, there in some markets, like in my market where I am in today, we actually have not. Actually, if you look at the growth that we've achieved over the past, I would say 10 years, you would see in some cases that the growth since 2015 to date is a negative growth. Yeah? So, and you're comparing it to an asset that has grown by 300 times, 400 times. This shows you the amount of risk. Now, obviously, assets grow for different reasons, and part of it is sentiment and liquidity. And this is also why real estate grows, because when you have easy mortgages, low rate mortgages for everyone, people are plentiful. They have so much money, they will simply utilize that money partially to buy real estate, while I would argue they buy more equities with that money, generally, at least the big money and the institutional money, because all of this drives its way through the chains and through the veins and gets to the institutions, and where it's invested in magnitude. So keep this in mind when you want to panic next in the real estate market. Keep it in mind also that your real estate is as good mostly as it's cash flowing. So there's no need to panic generally, because in equities, sometimes or most of the times, there's no dividend. Your profits are profits out of performance, because the buybacks are happening, or because the balance sheet is expanding and the revenues are growing. But this all depends on the performance of the management and the performance of the markets and many other scenarios, and performance of others in the market, competitors to that company that you're buying into in the market. While in real estate, it's a simple thing to account for. It's more simply quantifiable and qualifiable. So no need to panic. Just calm down. And if you do such a comparison, I believe you'll be inclined to buy more real estate and sell other assets. It's not advisable for everyone. Definitely, people need to look at their portfolios well and understand their market and where are they buying real estate also. Yet, you are bodying an asset class here that is much more stable today, works generally better with inflation, and hyperinflation would be coming most probably, and maybe stagflation, where ad spending may be out or down, consumer spending may be down, yet everyone needs to live in a home. Yes, they will not have 3 homes with a vacation home, or with a summer home and a winter home and a city home, yet they will still need at least a home. Keep that in mind. Don't panic. Enjoy your day.